Oh, aloha everyone, Joshua Hayes at BigWaveTrading.com. Since this weekend's video, the market overall has been trading nice, but a bottom, they always have to start somewhere. So on a daily time frame, that's where you got to start. So I'll show you, actually, let's just go ahead and go to this one right here. So what you're looking at here is a weekly time frame of the SPY. You can see my TTM momentum indicator still low. My TSV is still below the signal line. PPO is below the signal line and the zero line. Lead line and TSV is below zero line. Balance of power is still bearish. And like I said, the momentum, and you can see all the overhead resistance. The 9 EMA on the weekly, the Fibonacci retracement, that price resistance zone, that Fibonacci retracement, the 50 weekly, another price level, and then the all-time highs. On a monthly, same situation. TTM momentum is going the wrong way. TSV is above the zero line but below the signal line. PPO, same thing. Histogram's bearish. And BOP is bearish. And once again, I will remind everybody, my ever-trusty TSV monthly indicator has been bearish since the middle of 2018. So with all of that in mind, it is no surprise that the market is trading the way it is. Just want to show you the QQQ on the monthly. The DIA, you can pause your video and look at each one. And IWM, same situation. It's ugly on all time frames. Here is a weekly IWM. You can see everything's downtrending. QQQ, same thing. DIA, SPY. But like I just said, you got to start somewhere, so might as well be for the daily. That being said, guys, what do you notice on this drop here? Huge volume, right? What do you notice here? Seriously? Really? Guys, knowing this, if we existed in any kind of normal reality pre-2008, based on stock market data going to the 1880s in the Dow Jones, we could say without a doubt, this is nothing more than a bear market bounce. And this is very typical in a bear market. However, in our new reality where algos are in control, huge volume sell-offs are always met with low volume breaks to new highs. So if we just keep melting up and break out to new highs, nothing would surprise me here. But this is an absolute joke. But nothing says we can't pull in on lighter volume, retest the lows, hold above the lows, maybe not even make it to even these lows, and then start to rally again on heavier volume. Ultimately, we are just range bound in between these highs, and this low, and this low. That's it. Keep it simple. DIA, we're in between this high, these highs, and these moving averages, and this low, this low, this low, this low. We're range bound. We're consolidating. But once again, where's the beef? It's a famous old commercial. IWM, a lot better. I do got to admit, I like what I see here. IWM, I like all these candles, and I'm going to reference this in stockcharts.com before I go. And I like the volume here. The small caps have been leading lately. So this is my biggest positive on a short-term time frame. The SPY, once again, notice all the volume on the way down, but notice the volume on the way up. So nothing to get too excited about there, right? So then I want to go ahead and re-bring up these charts. This is the accumulation distribution line in the Russell 2000. As we hit these lows here in the Russell 2000, notice the accumulation distribution line held up higher lows, and you'll notice it's holding up relatively well. Now, that being said, on this recent move of higher highs, accumulation distribution has not confirmed. On the SPY, same thing. And not only is this a negative divergence short term, but if you look at the New York Stock Exchange advanced decline line, in healthy markets, the NYSE advanced decline line leads the indices. It does not lag. And while the SPY is here right now compared to here, the accumulation distribution line is like, say, here to here. There's negative divergence. Not going to bring it up for this video. I want to try to keep this video relatively short today. DIA. Look at this bounce. Look at the accumulation distribution line. It's already at new all-time highs. It hit new all-time highs back here on March 26. So there's something going on. If you don't know what the accumulation distribution line is, it looks at the volume and the intraday trading, within the intraday trading. It does not count the gap downs in the market or the gap ups in the market. It only takes account the volume that happens intraday. So if we gap down but close up and we have bullish open candles, body bars, where we open low or close higher, the accumulation distribution line moves up. And that's why these all look like that. The QQQ, same thing. You see how it comes down here, but notice the higher lows in the accumulation distribution. So that continues to be a positive with our bounce. Here is another positive that's very random. I combine all of my Perfect Speculator scans into one scan to make the scanning easy. So the real Perfect Speculator scan looks for stocks within 20% of their 52-week highs that have made a previous 100% move in the past 52 weeks. Historically speaking, it is proven that stocks that do that then go on to continue to outperform the market and are the best stocks into the future. So if a stock gets to move 10,000%, it first has to make a 100% move, right? So that's what it's kind of looking for. It's looking for these leading stocks. Now, that being said, this scan of mine right here, this combines all of my Perfect Speculator scans. It looks for stocks within 75 that have had at least a 75% move in the last 52 weeks and is within 35% of its all new 52-week highs, That number is 1,010. At the market highs here, at the SPY right here, my Perfect Speculator scan hit all-time high in numbers of 880. That number, 880, has never been eclipsed before ever in the history of me having that scan until today. Today, by the end of the session, there is 1,010 stocks in this list. And I'm just going to go down through these. You can slow your video lesson down to see all these names up here. But these are the names that are in the list. There's 1,010 names. That's a new high by over 220 names. It's a new all-time high in numbers by over 10%. And the market is still nearly 20% off its 52-week highs. Gosh, it's hard to think that that's actually bearish. It's really hard. It makes me want to lean bullish. That being said, look at all these charts. They're sloppy. They're volatile. They look like bear market bounces. It's very possible we could easily top out and then roll back over and/or easily build handles, bases, consolidation patterns based on base patterns and get new long signals. But for now, ultimately, we're range bound, stuck in between these highs, stuck in between these lows, which is why it's impossible to figure out which way this market is going to go. It seems hard to believe that we've actually bottomed, knowing what the repercussions of all this is. Just to let you know, Maui is decimated. Decimated. Jobs are gone everywhere. Nobody has any jobs. Nobody's making any money. And to restart this Boeing 747 is not just going to be turning our car engine on, putting it into drive and driving away. There's a lot of checks and balances that need to happen before this 747 or 767 or 777 can lift up off the ground and fly in the air. So if we've bottomed, we've still got to consolidate more. I've got to get more handles out there. Now, while the indices say bear market bounce, I'll show you what is saying, nah, we've got a bottom. Now, this is my CANSLIM scan. These are all the stocks that are CANSLIM quality or were CANSLIM qualities before the bottom. And I want you to look at all these stocks that look like they're bottoming. SNBR, GCO, BYD. Look at this. This is what bottoming charts look like. So it doesn't mean that I can't re-reverse. I'll just let you know what happened like for some stocks I was watching. So Nail on Monday, I was like, look, this chart looks like it's bottomed. Last thing we want to see is a heavier volume reversal. Well, we got that the very next session. Even though it was up, closed near its lows, heavier volume. And then all of a sudden today, reversal. And this is happening everywhere. I mean, all over. RETL Yay, looks good. Oh, look at that reversal on huge volume. And then today, yay, everything's back to normal. My point is that there's a lot of stocks and indice leveraged ETF products that still look like we are bottoming. There's Boot, AQUA. I mean, there's so many stocks. TDG, I should start going through these a little bit faster, but these are all CANSLIM quality stocks. You can look at the volume, XPL, GPI, AJX. I mean, this is just how bottoms have to start. That being said, once again, here we are on an end-of-day basis. Look at STOR. That looks like it's definitely bothering me. Can I take this as a long position? I'll tell you if I can or not. I go here. I look at it. STOR. Nope, sure cannot. Look at the TTM momentum. Negative. TSV. Negative, negative. I can't. Oh, that's a weekly. Sorry. My bad. But look at TTM momentum. Still negative. It's not bullish. It's not blue. It's not coming out of a squeeze. I can't take it. But that being said, a lot of these stocks look like they are bottoming. And if they have, trust me, they've still got to create handles, because the one thing I refuse to do here that I don't have is FOMO. I don't chase. I wait for perfect setups or there's no setups. Let's see if I would have remembered GSX, that setup, how I liked it. How did that setup work out? Guess what? There was no long signal, no trigger, so nothing to worry about. DocU. I remember a lot of people wanted me to chase DocU. A lot of people were asking, how come you don't go long DocU? Right here. This is what it looked like. People were like, don't you like DocU? Yeah, I like it, but I don't have a long signal. Look what happened in 2 days. Now it's back, but, it's going to need more time. The bottom line is, once again, on an end-of-day basis, I don't have any new long signals, guys, speculative or quality. I also don't have any sell signals. I'm still tracking 19 names that are holding up just fine. Those long signals, when they come, I can quickly get fully invested as long as some of those signals are hot, beautiful, well-formed patterns. What do well-formed patterns look like? Let me remind you once again, this would be considered a well-formed pattern. Look at what this volume, price, and BOP surge looks like. That's a well-formed pattern. When I get that again, I will load up. Also, during this time, I got a lot of signals. From now on, I'm not going to do my little pinkly diddly trading. I'm going to make sure that I increase size on each trade I take. Now with WTRG, something I haven't back tested, because I'm not going to take anything long in size unless it also has a positive TTM. Do you see where that would have possibly have cost me had I done that back here for it? But at least TTM, when a bullish market, that's all I need to see. I just need to see the TTM momentum rising. If it's in a squeeze, I got positive TSV and positive PPO, histogram, I'm good to go. I'll take that trade every day. That's why WTRG was a trade then, but back then it wasn't a killer if it didn't have negative TTM momentum, because in a bull market, it doesn't matter. ARWR is another near perfect signal. This is what it looked like then. Let's go see what AR 523. Let's see what it looked like on the TTM then. There we go. Coming out of a squeeze, positive TTM momentum, at least it's going the right way. Also, so it could have been negative, but as long as it was doing this, I'm good. Positive TSV, positive PPO, PPO histogram, BOP, all in confirmation. So that's what I'm looking for. And right now, I don't have any setups like ARWR. I don't have any setups like WTRG right now, but I don't even need them to look that good. They can be 50% in quality, and I'll take a long trade. Right now, I don't have that. This is what most charts look like. I don't go long these charts on an end-of-day basis. So trust me, if we have seen a bottom in this market, there is plenty of time to get long. I am in no hurry and have no interest in chasing a market that's basically, once again, V-ramped off the lows. I'm going to remind you all one more time. How has this market acted following any V-shaped move? We go higher for a little while, then we go higher for a little while, go higher, go higher, go higher. So I'm in no hurry, guys. I know I have time. I know that when the signals show up, I can push it, get extremely heavily invested. By the way, I forgot to show you what ARWR did off that perfect signal. Why do I feel like I need to chase anything that if I just wait for my perfect setup in 6 months, I can get a 232% return. Okay, that's a bit extreme. So let's just use WTRG as an example. Why do I feel like I need to chase when if I don't chase and just wait, I can get in about a span of 1.5 months, a 21% return. Listen, this is a utility stock. So that's really going at the low end. I showed you one at the high end, and I went one at the low end. So let's average them out and put them in the middle somewhere. So now we're looking at, right around 100% returns in about 3 to 4 months. I can wait. I can be patient here. This continues to be a day trade or die market. Plenty of beautiful intraday setups are happening every day. Today was one of the first days I didn't see anything set up late in the day. So for me right now, my focus is on the day trading time frame, not the end of day stuff, especially with the way that I have so many different kind of mixed signals. But we'll see how this all hashes out. I'm very open-minded here. I'm very unbiased. I'm very flexible. I can see reasons for this to be a bear market rally. I've gone over those. And I've shown you stocks that give reason that we could also have a bottom in place. We'll see what shakes out on the next pullback. It'll be all about the pullback. This pullback, not deep enough, not long enough. To me, this is all part of just that move off the low. Another V-shaped, stupid stock market rally on an end-of-day basis. Doesn't matter intraday, but on an end-of-day, it's all about the small things. And right now, there's nothing small about these overnight moves or the way that this market trades. So safety is still my number one priority on an end-of-day basis until I can judge how these stocks that look like they're bottoming are holding up once they pull back. All right, everyone. If you enjoyed the video, please give me a thumbs up. If you didn't, give me a thumbs down. If you have any questions, comments, concerns, post them in the comment section. If you haven't yet, subscribe, ring the bell. I'll be back with you guys this weekend. Aloha.